Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, August 29th at about 12:30 p.m. Eastern. Well, before we go on, please know that I wish all of you a very enjoyable Labor Day weekend. It is the end of summer, so here we go. Okay, back to the market. The main indexes are drifting lower today after solid NVIDIA earnings came in this week, and the Dow and the S&P touched new all-time highs again. The core PCE, a key inflation measure watched by the Federal Reserve, did increase 2.9% in July, in line with expectations, but accelerated from the prior month and the highest level since February. Of course, the market is still, fingers crossed, expecting a rate cut in September. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the ETF that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $644.63, trading down just a few points from its all-time closing high yesterday, Thursday, at about $650 and change. Now, we know that the SPY kind of slowed its pace, its upward pace, in this past month of August. That's totally normal. The 20-day moving average has, the red line that you see on the screen, has caught up with it. It's been walking up that 20-day for a long time. And today, the SPY sits just above the 20-day moving average, which is now coming in at about $640. The SPY is still, of course, at a premium to the green line, the 50-day moving average coming in at 629, and the 200-day down here, the black line coming in at 594 and change. Now, we know that since back here, look left with me, back here, since the February all-time highs at 613, we know that the SPY and practically everything rolled lower from that February high, came all the way down here to its lows at 482. It was 481.80. I'm going to call it 482. Then it bounced from there, came up, smacked its head on the 20-day, the red line, 20-day moving average, then pulled back here to 508, then rallied up here through its moving averages. By then they were inverted, up here to 595, dipped down to the 200-day and the 20-day right here, then rallied up nicely and started walking up the red line, the 20-day moving average. Very, very nice, trading at a premium to it in July and then going into August. And then all the way up, dipped a tiny, tiny bit here the first part of August, then walked up to where we are here, again at $644 and change. Very strong uptrend from April to where we are now. Beautiful uptrend. This uptrend has been from lows to where we are now, a 34% gain, so nothing to complain about. It's just what we always hope for, and this time we got it for a little while. If we talk about here, what do we do with this? In the future? I think here that let's put a line of resistance here at the highs at 646. Let's say that the SPY has potential support near term here at the 20-day at 594. Of course, then we have the 50-day moving average here, again at 625. One reason we look at these February all-time highs is so we can use them as potential support. So we've got that down here at 613. We have the 200-day moving average down here at 594. We have this low here just above the 600 mark and so forth. So plenty of moving average and potential price support should the SPY need it, and on down. Now, I really wouldn't be surprised if the SPY, if the indexes in general, slowed down in the next few weeks. This is very normal after a strong run-up, and also normal at the end of summer, going into September and October. Nothing bad, just normal profit taking, especially after such a beautiful up move. Very, very strong. So just maybe, keep an eye on your protective stops here. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this follows the NASDAQ 100 index, the top 100 non-financial stocks in the NASDAQ stock market, including the Meta, Alphabet, NVIDIA, Microsoft, that whole group. Now, when I captured this chart today, right down here, the Qs were trading at $569.91, riding just a few points below. This was the all-time high back here a couple of weeks ago at about 583. And right now, it's very hard to see here, but it's riding a point or two below, just below the 20-day moving average, which is coming in at about 571. So we're right there. Still above the green line, the 50-day moving average coming in at 561, and the 200-day coming in at 518 and change. Now, looking back to the left side of the chart here, the Qs made the at that time, the Qs made the all-time closing high here at about 539. Then it rolled over, again, with everything else, came down, made that April 7th low down here at 402, then rallied up. See why we care about moving averages? Rallied up, hit its head on the 20-day moving average, moved back down here, back to 428, then climbed for the last 5 months here. At first at quite a premium. It got back over the 20-day, back over the 50-day, back over the 200-day. Very strong here in this initial move. Then climbed up and started walking up its 20-day moving average. Now we can draw, if I can draw a straight line, we can draw a trend line here also, but it did, and we can draw tighter ones if we want to move it closer. But at any rate, this is pretty general, and it walked up its 20-day moving average and all the way back up to where we are now. And that was a 42% run up from here to where we are now. On the Qs, a 42% run up. Of course, tech stocks have gotten all the glamour, all the attention. So if we say, what do we do with this now? We look at prior highs back here, right around 583, 584, so we can draw a line there. That's the only resistance we have right now. That's a good thing. We have potential support here at 560, down here at 561, we'll call it. Then 539, that prior high in. So we have that. Again, I'm sorry, did I say the 50-day moving average here at 561, then the prior high coming in here at about 539. We've got the 200-day moving average down here coming in at 518 and on down. So again, plenty of price support and moving average support should the Qs need it. And again here, tech stocks could experience some profit taking here, so don't be surprised if they drift sideways for a few weeks or pull back a little bit. That's normal, especially after a run up like this. Our final chart today is a daily chart of the iShares U.S. Real Estate ETF, the IYR. I haven't looked at this in a long time. Has 65 holdings. Top holdings include Welltower, Prologis, American Tower Corporation, Digital Realty Trust, and Equinix. Now, when I captured this chart today, the IYR was coming in at $97.29. Now, if you look at the moving averages here, and we'll talk a little bit about this pattern, if you look at the moving averages here, they're all pretty much at the 95 level. The 20 days at 95.88, the 50-day, the green line underneath is at 95, and the 200-day is at 95.17. This is one of the most orderly consolidation patterns I've seen in a long time. But we know that real estate, and to some degree because of what we consider to be higher, although if you look at the last 20 years, not necessarily so. But anyway, at least for our time period, what we consider to be higher interest rates have prevailed. So we'll talk about this a little more. Let's look back on the chart here. Look left with me. The IYR made a recent high, not an all-time high, but a recent high at 99. Then it fell down to this low in March down here at about 92, down through its moving averages, then popped back up to about 98. In the second half of March, you see how it dropped, then came back up. And look, speaking of moving averages, look how it couldn't get back over the 200-day, but it consolidated here in the second half of March, just between 94 and change here. Then fell dramatically on the April fall down here, and it came down here to 82 and change right down here. Then it popped up, went back up through the major moving averages, almost couldn't get over the 200, dipped down here to 92, and then moved up a little, and then basically consolidated here. All the way along here from about 95, 96. Just consolidated sideways. And, what was it going to do? Interest rates remaining the same. Real estate industry basically very quiet all across the country. Sellers didn't want to sell because they had low interest rates they were paying their mortgages on. Buyers didn't want to buy because interest rates were higher than they had been. So everybody kind of stood in one place. So the IYR traded right below its 200-day moving average, which was at the time up here around 96, 50, 97. Then at the end of July here, we got a little pop up in the IYR, a little bit of hope came in about interest rates. Then never mind, it came back down to where it was, down to 94. Then it popped back up this past week. We got a bump up on Fed Chairman Jay Powell's comments at the Economic Forum. So he seemed to be indicating that he's softening up on interest rate cuts here. So that's why the IYR jumped back up above its moving averages here and started trading, consolidating again. So what I'm looking at here is possibility of, especially if that September rate cut takes place, we're looking at a possibility here of a breakout in the IYR. In the coming week, if the IYR can stay above its major moving averages, and they're all coming in here at about 95, so right now it's at 97 and change. So this is a pretty tight trade here. If the IYR can stay above, I'm going to say 95, because they're all coming in about the same. And if the market is behaving reasonably well, I will buy a small portion, a small position of the IYR in my trading portfolio. I'm going to put a stop at 94 here. I'll give it a little room, unless I'm severely disappointed at some period here. But that's what I'm going to do to start with, a stop at 94 if it stays above 95. Now, if and when the IYR closes, remember that February high we talked about, if and when the IYR closes above 99, get a straighter line there, I will add to my position, and my stop, of course, by then will be a trailing stop. I will have hiked it up a bit. So you may want to keep an eye on the IYR in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, this is a great time to check out my timeless training programs. In my trading program, Trade the Trend to Profits, right here, definitely one of my favorites, you'll discover an easy step-by-step process that tells you how and when to enter, manage, and take maximum gains from long-term trades. I love long-term trades. They're a lot less work. They're known as trend trades, position trades, or core trades. And with this strategy, you can earn really good profits without having to stay glued to your screen all day. Our new low price for this program is only $127. And by the way, some of the trainings on this screen are only $59. And when you order, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. That's what I use. And once you purchase, you have unlimited access to learn at your own pace. So from our ever popular 7 steps to successful trading, to how to swing trades successfully, to trade the trend to profits, how to read charts, great for novices, 3 winning setups, great for short-term traders, and how to bottom fish like a pro, discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. Happy Labor Day. I'm Toni Turner, and this is The Market Now.